Starting a business that requires a sales tax permit? Coming up, McClellan Davis offers 10 great tips for those who need to collect sales tax. Start by checking the tax agency's website for publications, pamphlets, etc. that appear pertinent to your type of business. Download or order these and then read them carefully. If you have further questions and/or will be doing business of a type that involves complex sales and use tax issues, consult a professional with expertise in this area before you register with your state's tax authority. Do not rely on oral advice or opinions expressed by tax agency employees without obtaining further verification. Review the agency's application for a permit carefully, and especially watch out for the following. Questions about any business activities prior to the registration date. Your answers could trigger additional taxes, interest, and penalties. The effects can often be mitigated somewhat through voluntary disclosure programs, but the state won't necessarily point these out to you. Questions about predecessor businesses. If you are buying or otherwise taking over a previous business, you could incur liability for the predecessor's outstanding tax obligations. Be sure to ask about obtaining a tax clearance from the agency to avoid such exposure. Most applications ask for an estimate of your anticipated taxable sales. Be conservative, but not unreasonably so, in making such estimates, as the agency may require a security deposit based on these figures. Do not enter false information on your application. The penalties for fraud can be severe, and the applicable state statutes of limitations will be extended. When in doubt, consult a sales tax expert before proceeding further. Review the taxing agency's record-keeping requirements before getting started. State agencies generally issue guidelines for keeping records. Obtain these guidelines, read them, and follow them. Engage an accounting professional to help you set up an appropriate reporting system. Your accountant can also help you meet your sales and use tax reporting requirements. At minimum, retain business documents for your state's required holding period, generally 3 or 4 years. These include receipts, invoices, cash register tapes, and all other original documents. Some of your transactions may be legally exempt from sales tax, such as sales for resale or sales in interstate commerce, but the state will tax them anyway if you cannot document the exemption. Learn which documents are required to support your claimed exemptions, obtain them, and retain them. Become aware of your state's use tax requirements. You may be liable for use tax on business assets, supplies, manufacturing aids, etc., bought without tax. For example, if you buy from an out-of-state vendor who is not licensed to collect sales tax in your own state. If you'll be making sales in more than one state, determine whether you'll be regarded as doing business or having nexus or physical presence in each state. Different states have different and often far-fetched criteria for determining whether businesses have a physical presence within their borders. You'll be required to register and collect the tax whenever your business meets the state's nexus criteria. McClellan Davis has represented thousands of clients, from sole proprietors to multinational corporations, including virtually every type of business that's subject to sales and use tax. For more information about McClellan Davis, please visit us at usa-salestax.com. These great sales tax tips were brought to you by McClellan Davis, a sales and use tax consultancy.